Hello, I'm Sam Stovall, Chief Equity Strategist of S&P Capital IQ. At this week's Investment Policy Committee meeting, we raised our 12-month target for the S&P 500 and made changes to our recommended asset allocation. S&P Capital IQ's Investment Policy Committee raised its 12-month target for the S&P 500 to 1780 from 1670, representing a 10.6% increase from the June 5th close. In the coming year, we expect to see S&P 500 multiple expansion as investors become more convinced of sustainable economic growth and earnings increases and get more comfortable with the gradual unwinding of Fed stimulus. We also increased our recommended exposure to U.S. equities to 50% from 45%, while reducing the suggested cash exposure to 10% from 15%. We kept our underweight to bonds intact and remind investors of our preference to shorter-dated bonds in an expected rising rate environment. We chose to make these changes now as the recent decline has brought the S&P 500 down to the top of our expected turnaround range. Through May 5th, the S&P 500 fell nearly 4% and is closing in on 1600, which represents an area of technical support, an important retracement level, and the location of the 50-day moving average. It therefore appears to us to be a logical spot for the S&P 500 to turn around, as breakout levels are frequently tested before the next uptrend can begin. If the 1600 area gives way, however, we target the 1540 to 1555 area, which represents chart support and the 38% retracement of the rally since November. As a result, we recently advised clients to use these projected near-term price declines as opportunities to add to equity holdings. I'm Sam Stovall, and I'll talk with you again next week.